All right, welcome back, everybody. John Caruso here. Today is May 26th. We're going to do a quick look in on the market, pre-market here. But at first, we're going to take a look at yesterday's FOMC Minutes release. We did hear from the minutes from the Fed's May 3rd meeting. Participants agreed that the Fed should expeditiously move monetary policy more towards neutral. I do believe that the bond market has neutral priced into it right now. But they also did mention that a restrictive stance on policy could be appropriate at some point out in the future. Following those minutes, we did see a quick sell-off in the stock market. Then we did see the market come back into the close where we finished positive on the day. We did hear, following the minutes release, we did hear from the Atlanta Fed's chairman, Raphael Bostic, who mentioned that a September pause in the Fed's interest rate hike cycle makes a lot of sense to him. So that doesn't come as a shock to us. We know that the Fed has pulled forward a lot of interest rate hike expectations. The December Fed funds future is priced at neutral right now, pricing in 2.5% Fed funds by the end of the year. And we'll kind of go from there. We still think that they might be pulling more out of the market as the year goes forward and the growth data begins to slow more expeditiously in coming quarters. So stock market right now, S&P 500 hovering right around 4,000. We do have some notable weakness in the agriculture markets. There was a headline yesterday that came out suggesting that Russia could be looking at opening 2 Ukrainian seaports that would allow some grain to flow throughout the world. Obviously, that's been a major concern for the agriculture markets here as of late. What else do we have here? The gold market, relatively flat, hanging around 1850. We do like gold still. We think gold is in a very important area. I do think gold could come off one more time between 1825 to 1800 over the near term, which is going to allow you to become a little bit more bullish, we think, on gold. We know that gold over the last couple of months has declined from roughly 200-point decline, peak to trough. However, the longer-term trend of gold never broke. It got very close down there along that 1800 line, but it never broke. It maintained its bullish trend on a longer-term basis. And that's what we're looking for to hold going forward. So another retest to 1820 to 1800. I think you can become a little more bullish on gold there. And then, from that point, we do think that we will see new all-time highs in the gold market over the course of the next 1 year. So keep that in mind. Oil prices hanging right around 111. I'm getting a positive divergence in oil here over the near term, where I've got some of our oscillators pointing down, but price action remains up, which means we could still see perhaps 115 to 116 here in coming weeks. That's really all we have for you here today. Feel free to message me if you have any questions about any other markets. We are trading a few of the currency markets right now. We'll go from there. So I'm John Caruso. We'll catch you back here next time.